Alrighty-o, good afternoon. Happy Thursday. We're rounding out February. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I'm actually out of my shorts temporarily because of the degree of downside extension that's here. And then I kept some TQQQ and some Google. Those are going to be smaller trades. I restarted some US and Path. Those are small sizing. I guess I should clarify. TQQQ and Google are going to be quicker style trades, most likely. Start a little bit they're just purely based off the degree of downside extension we have with the indexes here, and US and Path are kind of longer term names I trade a lot of, but had gotten out of before this market crash started, which was nice. Saved myself a few buckaroos. Okay, SPYs, mizzoked, down 1.6%. Qs smoked, down 2.75%. IWM smoked. Actually, not that smoked. Sometimes IWM on these types of days is off like 3%, but down 1.5%. What did TLT do? I'm actually surprised this isn't green on the fear trade, but it's a little bit extended up after a couple big days there. And the dollar is also green, so actually got a little bit of help from the dollar today. All right, so let's actually take a look at the technicals here on this market, because it's been a bloodbath. So we're gapping up this morning initially. Nvidia was gapping up this morning initially. Let's go to the pre-market chart here real quick. So, the initial news, obviously, the big event was Nvidia. Nvidia after hours yesterday was very boring. We hung around and watched it trade back and forth. Pre-market this morning, it kind of grinded back up to the upper portion of its range, which is this 130. Wow, I got a really good short yesterday. I shorted 136.06 after hours, or maybe it was 09. That's a good price. But yeah, so it was grinding up to the upper band of its range. I expected Nvidia to be pretty sloppy today, to be totally honest. The question that I was asking myself, this was before GDP even came out, was what do I think about this market on a situation where the Nvidia earnings report, the most important earnings report, becomes a non-event, right? Non-event, not a huge move up, not a huge move down. And my general thought process, I think as everyone knows, has been bearish. And I had said it in a couple spots yesterday that I felt that if Nvidia was a non-event, the market would trade down, or if Nvidia traded down, then the market would trade down. If Nvidia traded up huge, it could save the market. But then I was kind of almost rethinking it in the pre-market a little bit this morning on if Nvidia being a non-event could cause vol to come back down, which could then once again create an underlying bid to this market or not. So I felt actually more uncertain this morning than yesterday. Yesterday I had more conviction that we were going to continue down. This morning I felt a little bit more uncertain about it, but I was like, the technicals are going to be my guide. If we are going to be bullish at all on a non-event on Nvidia, we're going to get above yesterday's high. We're going to get above 600. SPYs get and close above 600, then SPYs are looking pretty healthy again, and it might be the situation where we're getting a vol crush and we start getting stabilization of the market again. But obviously, if we trade lower, we know that we are still in an environment right now where trading down can feed on itself. CTA's got to sell at a certain point. Vol control funds got to sell. Per the Goldman note this morning that we saw, gamma's negative, so that means that into a down move on SPX, there's going to be selling. Into an up move on SPX, there's going to be buying. So bottom line is, into a down move, you got sellers from every cohort. So we already know long short funds have been selling. We know retail has started selling. Pretty much the only thing that's out there that's buying are corporates themselves into a down move. So a down move would really feed on itself. So that's kind of where my thought process was this morning on NVIDIA, I was actually feeling more uncertain than I was yesterday when I felt a little bit more convinced that the market could trade down. Then we got GDP. GDP was in line. It was a non-event. And then, I think that the Trump administration today really did the deciding for us. They upgraded the tariffs basically, kind of fast forwarded them, announced that the Mexico Canada tariffs are now going to be on March 3rd. I think originally it was slated for the beginning of April. China's going to get an extra 10% tariffs, and then, restated um, the retaliatory tariffs for April. I mean, look, this is just very simple stuff here. Markets don't like tariffs. Okay. Um, Now the market has done a great job so far of, I want to say, kind of calling the bluff of the administration that sure maybe some tariffs are going to go through, but they're not going to be to the extent that they've been saying. And then all of a sudden, this kind of fast forward of things, I think, just really made this market almost more nervous with the bigger reaction here than we've seen at any other point on any of the tariff rhetoric, because March 3rd, which I think is the date, is Tuesday, and today's Thursday, and we have a weekend in between. So, we've seen consistently on Fridays this past month that the market doesn't want to take risk over the weekend, and now you just throw this whole extra piece of risk in there, whole piece of uncertainty, and we know markets hate uncertainty. And it turns into, and the timing of it also, we all know that Trump watches the market. Somebody's got to teach Trump about how gamma works, because then he could try to time his announcements a little bit better on things that he thinks could negatively impact the market. He could say them in more positive gamma environments, and then maybe the market holds in a little bit better. And then when he wants to say something really good, he could do it in maybe like a lesser gamma environment or past OPEX to make the market shoot up. That'd be a great way to go about things. But somebody's got to teach him about how market makers work in the options market first. Um, but that'd be kind of funny. But anyway, you come out with an announcement like that at a time we know this week, right, after OPEX on Friday, that the market can move now. So this is very different than what we saw in the beginning of February, for example, when negative news came out and it was just absorbed by the market because there was just so much buying there. This is just a different environment now. There's no forced buyers, and if anything, there's forced sellers into a down move, and markets hate uncertainty. So we'll see what happens. I mean, the flip side is that Trump watches the market, so there is maybe a chance here where once again he doesn't move forward with things. But if he were to actually do, and I still don't think he will, but if he were to actually do full on 25% of across the board tariffs on Mexico and Canada, this market is nowhere near done. Nowhere near done to selling. I mean, you'll create I really think, a global recession if you do that. But we'll see as that plays out. My initial thought process, just from forget about news and stuff like that you do need an event to trigger the downside, and we have had events here in these last couple of days. Um, my thought process was that this market big picture could give us like a 5 to 10% correction maybe. So I was thinking the area between 580 and 570, the 200 day there, is very possible for a big picture market pullback. And now here we are, we're already at 585. So we have pulled back $28 or something like that from all-time highs in the SPYs. So we're getting down there pretty quickly. Today, as far as I'm concerned, is a renewed day one. So we had 3 down days in a row. Then we had a little bit of a relief snapback rest day yesterday, which was perfectly what we called for in front of NVIDIA. The upside of the tail from yesterday basically gets all the way to the 80 MA on the daily. So we fully satisfied with the SPYs, not with the Qs. We fully satisfied with the SPYs the extreme extension that we had 2 trading sessions ago by yesterday's high. And yesterday it's a red candle, but we actually closed, I think, a little bit positive. Yeah, a little bit positive. So yesterday kind of resets the count. So, and though we actually couldn't get an update on the short-term tactical this morning, I'm pretty positive that it was out of the green zone. So kind of reset that also. Um, Reset that count, if you will. Like we had been saying, we've almost never seen short-term tactical close in an extreme zone 4 days in a row, and we have never seen it happen 5 days in a row. So that kind of resets today's move lower as a day one. So whereas 2 trading sessions ago, when I was patient but finally started buying, I had a lot of conviction that I was going to make money. Today, when I was buying some of the downside extension, was a little more nervous about it because I was recognizing that today was just a day one. But we were once again getting right back into extreme extension to the downside. So SPYs here are trading at, let's just call it 586 with the ADMA at above 597. So we are like $11 to $12 extended in the SPYs as of today's close. The Qs here, which never fully satisfied their extension, they obviously gave the rest day yesterday, which kind of acted as a reset. Qs are trading at 501. That's a little bit off lows here after hours, but Qs are trading at 501 with the ADMA at 518.64. So we've actually got like $19 of downside extension in the QQQ right now. It's getting up there as some of the most extreme downside extension versus that ADMA that I can recall measuring over the course of the last several years, and that includes going through the 2022 bear market. In the 2022 bear market, though, we certainly had a few days where it got a few sessions over the course of that calendar year that were even more extreme. I know it was just in an afternoon meeting very recently that we pulled up the Russian invasion of Ukraine trading session. Where on that gap down, we gapped down, I already forget what the number was, but $27 of extension in the Qs, I think, on that day. So us being at, I think I just said 19, is really a big number. It's getting up there, but we've seen worse. So it's not impossible to get a gap down tomorrow. But if you get a gap down tomorrow, just based on how our extension rules work, it's, as far as I'm concerned, a must buy, at least on the short term. And I would say a must buy for more than a day trade if it wasn't the Friday before a weekend of uncertainty, which can give you pause and make you a little bit nervous. It certainly will for me. But closing with $19 of extension, if we get a gap down tomorrow, I think you got to buy it. And that's also why I started kind of buying up some stuff into the close. Nothing huge, but I've got, a smallish, maybe like a little bit bigger than small, but not medium sized TQQ that I kind of was buying basically into the close. Average price on it's probably like 72.50. TQQ is trading at 72 right now, so it's a little bit against me. A medium small Google position that I also was buying into the close. My price on that is like, I don't know, it's pretty much right where it is after hours here, like 168.85 or 168.90, something like that. But again, those trades are just meant to kind of take advantage of the downside extension where, make a few bucks on a gap up tomorrow, which, is also a situation that could easily happen with this degree of downside extension, but not so big that I can't buy more if we get the gap down tomorrow that I think actually creates a really good short-term long setup just because of the degree of downside extension. And tomorrow would be a day 2. I'd rather it be a day 3. That would give me even more. I'd rather be a day 3 and have it be like a Tuesday than a day 2 on a Friday. But, if we gap down again tomorrow to $20 of extension in the Qs, I'll be adding to Google, I'll be adding to TQQ, I'll probably even buy a few other things and at least look for that, short-term bounce off of the extension and kind of take it from there. And in a negative gamma environment, the rips in both directions can be very hard and very fast, but that also includes the bounce backs. I think I said it also in an afternoon meeting recently. some of the biggest, fastest up moves that actually happen in bear markets. And I remember back in 2022, we did a really good job taking advantage of those bottoms and those bounces for the continuation. So that's kind of where the spies and the cues are. It's a little bit of how I'm positioned. I hate that I'm out of Palantir, but I have an offer. I have offers out right now, so we bounce a little bit more. I'll be back in it. That's the one short even in this downside extension I'm willing to get back into very quickly, but it's probably because I'm still trading my P&L. What else? Very, very, very happy with how VKTX traded today. I was talking about this one in the morning meeting. It was one of my ideas for today. I really liked how that caught that after hours bid yesterday. I thought it was very bizarre how it did that. And then pre-market this morning was acting relatively strong. And then all day today it acted relatively strong. Only took a little bit of a hit into the close. You really need the stock to get back above 30 though. Back above 30, you're starting to confirm like a little bit of more of a failed breakdown. I almost feel like it would have done it today if it could have gotten any market help. I just thought the stock looked really, really good, and it's my biggest position now. So I can't be mad at all if like the one long that I have on like a decent amount of size was able to stay green all day. I mean, that's just very fortunate because it really shouldn't be that way. But everybody gets lucky once in a while. Uh, and then I lost some money in this PGY today. I'm keeping a little bit of it. I want to keep it on my radar, but that wasn't as good. And then I started real small on S and U again. Like this U is still okay post earnings. This S is getting decimated to the downside. I had fully liquidated my position above 25. So back down here in the low 20s. I was like, all right, I'll nibble a little bit. And same deal with this path. I got all out of path at 15.25. And now it's been down every single day since I got out. I'm gonna go right down here at 12 and change. I'll start nibbling on this thing again a little bit in a small way, but those are small positions. It's just interesting to see myself be 100% long right now overnight when I'm really not a bull on this market still. Bigger picture, I still want a bigger washout, but this degree of downside extension makes sense to be book and profit in shorts, which I certainly did. Reshorted TQQQ off the open today. Palantir, I added to Palantir this morning. I'm all out of Meta and MSTR, but this degree of downside extension, it really makes sense to be book and profit on those shorts and nibble on some longs to look for a bounce back off the extension. And that bounce back off the extension I still think is shortable, in the same way that I thought that yesterday's bounce back was shortable. So we'll see. I'd love to get some updates on CTA positioning and things like that. Maybe I'll be able to get my hands on something in the morning. But this is definitely a week here where there's bearish seasonality. We know that the market has the ability to feed on itself right now to the downside. There's historically outflows that happen in the second half of February, and this week, to steal a line from Jim Carson, is a window of weakness after OPEX. So we have the ability to trade lower, and we certainly are, and especially if you give the market a reason to, because you still always need the event. You always need the event to kind of trigger things, and the market was given the reason. So here we are. That is all that I've got. I am happy, like always, to take advantage to answer any questions. Why can't I speak? To answer any questions anybody may have. RKLB getting crushed after hours. I just got to fill it on some Google on the offer. Yeah, Rocket Lab, another one. The SEC says meme coins do not involve offer or sale of securities. Okay. From Roble, even with the current uncertainty, I just sold a little TQQQ. If PCE is a non-event tomorrow, would that give us an underlying bid? I'm not sure about that. I think if it's a non-event, that's exactly that. It's a non-event, and the market's going to continue to do what the market's going to continue to do. If you want an underlying bid in the market, you need to see like probably a light PCE that gets people less concerned about inflation. Um, Assuming we trade at these levels when the number hits, which would be spurious. Yeah, I'm not sure. I'm not sure. On PCE being like an inline number or being a non-event, I don't necessarily think that that helps in the same way that NVIDIA being a non-event didn't help. You know, because that was part of like what was giving me pause this morning when I was reviewing my thought process was, well, maybe NVIDIA being a non-event means that we get a lot of vol selling that comes back into the market, which stabilizes the market a little bit, but it didn't happen. So we'll see. We'll see if we get any more headlines out. We are in it. I mean, if anybody traded the last Trump administration, we didn't have it under the last administration. I'm not necessarily judging one as good or as bad, but the last Trump administration was a headline-driven market. It was similar to what we saw happen today, and in both directions. There are plenty of times where Trump would say something in his first administration and the market would rip up. Plenty of times that happened. There are also plenty of times in his administration when he said something and the market ripped down. But there was always, for all 4 years, this little uncertainty factor of anything could be said at any time that's going to rip the market. And we didn't really have that. Last year was, last 4 years were a little sleepier, pun intended. Um, anyway, I don't want to make it a politics thing, but it's just the environment itself. From Jerry, would you recommend that we subscribe to the various sources within Pat's note each day? Are you subscribed to anything? I would like to be more targeted in my general market research. I am not subscribed to anything. It's probably a better question for Pat. I feel like Pat does a really good job getting us the most important information, to be honest. So, you know, it's up to you if you want to take on those extra resources to do extra research. It can't hurt. I don't think it can hurt. It can only help you learn more. Um, but I'm not personally subscribed to anything beyond our team virtual trading floor here and my trading software. That's it. But I appreciate the question. Robert wants to know if I can explain my Google put position along with my Google equity position. So they're just two different trades. At one point today, I decided to sell a Google 170 put that expires tomorrow. It's pretty small, and my original thought process was, if we close below 170 to tomorrow, I'll take the stock because we'll be super super extended down, and if we close above it, I'll keep the premium, and I'm fine with either situation. And then when Google started really selling, when the market started really selling into the close, I put Google on as a long, but it's a totally different trade. So you can almost view them as completely separate trades. They are, at least in my mind. So yeah, that's it. The Google long that I took on, it's just off the extension. I'll be out of that, I don't know, by 170, maybe 171. Whereas the options position is more based on how we close at the end of the week, whether or not I get a little bit of Google assigned to me at these prices with this degree of extension, which I'm fine with because I'll trade it, or if it closes above 170, I just keep the premium. From Romley, if there were a gap down that you end up buying, would you anticipate it being more of a time correction due to gamma or price correction? Price correction. Gamma is negative right now, so that means that the movements are bigger, right? So I'm looking for if we were to gap down, I'd be looking for a heavy snapback higher. How that snapback higher happens is to be seen. Usually in those situations, they happen in one of a couple ways. Either the market opens up super extended to the downside with a big gap down and we immediately get bought up, or the market gaps down really big and in like the first 10 to 15 minutes we sell very hard and it's just pure panic, and then that creates like a big downside hammer doji, which is super, super, super viable. The second thing I just described is what we used to see for short-term bottoms all the time. Those capitulation panic bottoms. We don't see that happen nearly as often as we used to anymore. We see more often these days the first thing that I described, which is the gap down that then immediately gets brought back up. But we did see like that capitulation bottom in that Amazon that other day. This one right here, with the heavy volume, with the puking selling that was like coming into the market there. Um, that was like an old school capitulatory bottom. It was very exciting to trade. So that's what I would expect on a gap down tomorrow. Back over to the YouTube from Varun. Are we going down to COVID lows? I'm gonna go with no on that one. From Tate. Back in November, I asked about the IWM leading the market in some form. I know this isn't the same scenario as 2021 when the market topped, but isn't it notable that the IWM had multiple chances to break out in January right before DeepSeek it never did? And now, with all the positioning data showing a failed breakout last week, does the fact that the IWM never broke its December downtrend signal broader market weakness or just a lack of momentum to push higher, acting somewhat as a leader? I really don't know. The dispersion trade is at all-time highs, but that's got to be down now. If we can get an update on that from these last few trading sessions, I'm assuming it's down a little bit. But eventually the markets need mid caps. And when they failed to, alongside with names like Palantir, Hims, and DraftKings, was that the last place to hide? It seemed like it. Well, but yeah, there is also safety in what I view as value plays, right? And I've been saying this in repetitive morning meetings about I like the XLE in the market down move as a place where we can potentially hide. So, I like having XLE exposure right now, maybe XLP exposure, but XLP names I just find are so boring. Whereas at least the energy stocks I find can move a little bit. But there's value in these dividend paying XLE stocks that trade at low multiples and are make good consistent money. So yeah, I mean XLE closed green today. Definitely happy to see that. I've got a couple positions that are related to it. And XLP we know had been on a tear. It is also worth keeping in mind, though, that at certain points in true bear markets or pure or true like panic selling markets, they sell everything. So a lot of times initially you'll see like rotation into energy, rotation into staples, rotation into industrials, and so far that's kind of what we've seen. But at a certain point, if this were to really deteriorate, then they're going to start selling everything because people need to raise money. So then there's no place to hide except cash or just have short positions on and make money. But yeah, that's my general feedback for you on the IWM thing. It's definitely an interesting thing that you're positing there, and may very well be true. Um, I'm genuinely not sure, but what you're saying makes sense. Uh, Please explain gamma. Sure. So gamma is one of the Greeks that kind of comes from the options market. I think it's technically like the rate of change of delta, which is the rate of change. So it's like the rate of change of the rate of change, basically. What does it mean for us? So what it means for us, and we spend a lot of time talking about it at the index level. So I'll just kind of describe it through the index level. Whenever someone takes an options position, who's usually, especially big players, big money, whenever someone takes an options position, who's on the other side of the options position? Most of the time, it's a market maker, or also known as a dealer. But market makers don't want risk, right? So if you bought a call position, that's a bullish position, and let's say that there was a market maker on the other side of that position. Now the market maker is short a call, so has a bearish position on, but the market maker just wants to make spreads. the market maker doesn't want to take risk. So that market maker, what they're going to do is they are going to immediately buy stock underneath it. Um, so their buying stock underneath it actually creates a bid under the market. So what I'm actually describing in this situation is what creates more like a negative gamma environment, where it and then you have to understand the dynamic nature of options in terms of how options, how their prices change. They change, they change based on the movement of the underlying, but they also change based on a whole number of other factors, right? They change as time goes by. They change as the volatility changes, because things like time and broader market volatility change the probability of a index option eventually closing in or out of the money. So what a market maker needs to do is, now that they sold you that call, they start by buying the stock, but then they also have to continue to manage that position throughout the time of the options position until it expires. So I'm kind of giving you like a longer winded answer here. But what we typically see happen at the index level, and this is probably the more important information for you, what we typically see happen at the index level these days is option sellers. So for example, there's like some ETFs now, like QYBD or whatever. I can't remember the symbol. It's got a lot of assets under management. Like there's these ETFs out there now that are QYLD, that are like kind of primarily designed for retirees, actually, to be able to maybe give up some upside, but also be able to try to get some consistent cash flow. And basically, they are it's like an ETF that's just like a covered call selling ETF. So what that ETF is doing is it's constantly selling like at the money uh, S&P calls. So who are they selling? So now it's kind of the opposite of what I just described. Who are they selling those calls to? They're selling them to the market maker. So now the market maker is long a call. It's a bullish position. They don't want to be long that call, so they have to sell stock. So the one concept to keep in mind is that the market makers are usually on the opposite side of large options trades, and they don't actually want to have risk in the market. So they're constantly focused on hedging. And then, based on the dynamic nature of how options work, they need to be constantly adjusting their hedges based on price and time and volatility. And then what that means is, so now, like, just going directly back to this gamma number, is if we are in a market that has positive gamma at the SPX level, as the market moves higher, in order for them to hedge themselves, they need to sell. As the market moves down, in order to hedge themselves, as a positive gamma environment, they need to buy. And then we get estimates on what those gamma numbers are from some of the big banks that model this stuff, like Goldman Sachs and Nomura and Bank of America and JP Morgan. They kind of all do it now. So, for example, last week before options expiration, uh, you know, the models that I looked at were given a couple different numbers, but before options expiration, it was about a $10 billion positive gamma number. So basically, what that means is, and that's a very large number. If the S&P goes up 1%, it's met with $10 billion of selling. If the S&P goes down 1%, it's met with $10 billion of buying. So um, that has a very insulating effect on the market. $10 billion is a huge number. For reference, I think that like on an average day you get $50 billion of money flow. So if you think that on an average day you get $50 billion of money flow, and then today 10 billion alone of that would be buying into a down move or selling into an up move at 1%, you can just see just the degree of insulation that can have on the market. But then when we get to options expiration, like we did on Friday, think about it. The options expire. They're gone now. So And obviously, there's future dates and there's a rolling that takes place and all that stuff. But now, as soon as you get the options expiration day, that all of that positive gamma from market maker hedging that was in the market last week, last Wednesday, last Thursday, is gone on Monday. And then what happens in an environment if we begin to go sideways would be that option selling comes right back in, and it's like rinse and repeat, and the gamma number slowly builds up again, and you get an insulated market. But immediately after options expiration, you have like a period of time, a window where I think initially on Monday what I saw was we dropped down to 2.5 billion. It was still positive, but it was only now $2.5 billion of buying or selling into a 1% move instead of 10 billion. And then you also have to remember that the market movement changes the way that they need to hedge. So at certain points, especially in down moves, like when the market is moving very quickly, I guess it can happen at up moves also. You can actually see that gamma number get reduced, or potentially even go negative. So what started this week as a smaller positive gamma number has now, with this movement here, based on what I saw from Pat's note this morning on that latter portion of it, it was actually just one sentence in there because I didn't realize that we were in a negative environment, and I haven't seen an updated chart. Though I did post a chart, I think it was just yesterday morning, that showed the gamma level on movement. And if we went down 2%, I think I saw on that chart, if I remember correctly, that it would actually bring us into a negative environment. Well, per the Goldman news letter this morning, we kind of breached that part. So now, when you go from that, think about the insulation effect I just described of positive gamma at the SPX level. When you go to negative gamma, it has the opposite effect. So now let's just say, I'm going to make this number up because I don't know what the number is right now. Let's just say we're in an environment right now where the SPX gamma level is negative $3 billion. Well, what does that mean? It means the opposite of what I was saying before. So now when the market goes down a percentage point, it's actually met with $3 billion of additional selling. Also true on the way up. If the market moves higher by a percentage point and we're negative $3 billion gamma, it's going to be met by $3 billion worth of buying. So that all of a sudden can make these movements much, much, much bigger. Much bigger on the downside. It also can make, though, this is what I was talking about earlier, it can also make the snapback rallies that significantly more harder and faster. So this is all the market dynamic stuff that you want to have an understanding of, because it gives you a better understanding of, risk, reward, and probability of success. Like, all right, I'm in a negative gamma environment. The market's selling off really bad. It's, $14 of extension in the Qs. Do I want to start buying now? Or do I want to be a little bit more patient than I would otherwise because of the environment that we're in? Like that's a piece of information you want to be keeping in the back of your mind when you're making a trading decision on, in this example, potentially going counter trend on the market or something like that. Or the opposite is true also. When you knew that we were in a $10 billion positive environment and the market looks like it's moving up even a little bit, you can probably short that because you can assume that you're at the upper end of a range and we're going to be coming back down. So it's just a really good piece of data to know. And that's just like I think kind of like a very general overview, because it gets really, really deep at certain points. And I think Bill is deeper in that world than I am, with how he's looking at almost like the gamma at different price point levels and like smaller time frame changes to it and things like that, which is really great if you can educate yourself to get to that point, because most people just don't understand it. And again, to give myself half credit, because honestly the other half of the credit I think goes to the team here that has helped to provide the information and has helped to teach me this stuff. Go back to February 29th here, Wednesday, a week ago, when the market was breaking out to all-time highs. If you are just a 100% technical analyst, and I certainly believe in technicals, I'm a big believer in technicals, but if you're a 100% technical analyst, ignore these 6 red candles here that just happened for a second. Does this market on this date look like it's going higher or lower after the close on that day. It looks like it's breaking out. It looks like it's going higher. It looks like it's set up to go to 640. Like doubling this $30 pattern to the upside through 610. It looks like we're set up to go to 640. But if you understood kind of all the information that we're always talking about, you could take pause. I'm not necessarily saying, even though I kind of did it, blindly short a market that's breaking out. That could be a very dangerous thing to do. But it can at least make you take pause and say, hey, maybe this breakout that I'm looking at is not all it's cracked up to be. And then you can utilize that information, if for nothing else, to help you just understand like layers of probability and risk reward on the trades that you're putting on, because you understand this market can stretch very far or it can become very tight. So I'm willing to jump into counter trades in a much more patient way or a much faster way. I'm going to be looking for a much less reward or a much more reward, or I have a lot more risk here because it could move against me further than I think, so I need to have smaller sizing or bigger sizing if the opposite situation. So you can utilize that information, I think, at a minimum as like an additional kind of layer of probability there. So long-winded answer to your question, but there's like so much to unwrap. And again, the biggest thing that I would recommend is, because this is how I've learned all this stuff and I'm still in a learning process, is quite simply make sure that you read Pat's note every day, make sure you read the information that we're getting in the VTF every day, and then get your AI out. I like to use Perplexity, and there's been plenty of times where I have literally like copied and pasted a sentence or two from a note and put it into AI and asked AI, hey, can you break this down for me? Can you give me an overview on what this means? And then you just dive deeper and deeper and deeper into those concepts, and then you start to be able to slowly wrap your head around it. I mean, that's kind of what I've done, and it's honestly still a learning process. Hope that helps, Edward. GLD down is interesting. I mean, look, GLD also at a certain point in a real bear market, people think gold is a hedge against the market. Sometimes it is, but sometimes it isn't. Because at a certain point, like I was saying before, when we're looking at staples, at a certain point they can sell everything and anything. The current fear and greed index is 21, which is extreme fear. A lot of people misuse this measurement as a reason to buy. Yeah. Notice how the last 3 times, vertical red line. Interesting. The index made a low. The SPY dark blue. The SPY, which is dark blue. And sorry, someone posted this this tweet from Brian Shannon in the VTF. Brian Shannon is the man. Continued significantly lower. This is not a market call. It's just a reason to think critically about what you hear. 100%. 100%. Fear greed index being in extreme fear is not a reason to buy. I mean, does anyone remember the COVID down move when that thing was like stuck at 0 for what seemed like ever? From Paul, what I like is when you're up so much you don't sell because you don't want to pay taxes. Now you don't have to worry. Yeah. Yeah, yeah, and also I still think that, look, I do a decent amount of phone calls for people that are interested in the proprietary trading business. I remember coming out of COVID, that period of time, like the 2020 period, and speaking to people sometimes in like 2021, like after the meme stock started crashing back down, people who were got involved in trading for the first time during that COVID period of time, didn't know anything, but just were YOLOing call options and making a ton of money, and then lost it all when the market stopped, going up, and then found out that they had to pay taxes on the money that they lost. And I've actually had to do that myself. That happened to me, I remember, pretty decently. I think it was like 2013 into 2014. I had like a really good end of the year in 2013, and then I like lost my entire year in January 2014 or something, and then I had to pay taxes on my 2013 money that I made, and it was not a good situation. But the point is that a lot of people I think had a really good year last year, just from like an investor perspective or from a retail perspective, and they're gonna have to pay taxes on that. And now, if those holdings are going down in price, that can also feed on itself. It's an additional risk for this market as we get into this March April period. Yep. Yeah, I agree with you, Tate. All right, looks like I got through all the questions, and it's 5 o'clock, so we'll wrap it up there. Have a wonderful night, everybody. I'll see y'all for Friday. See if we got down tomorrow or not. Be excited. Be up early. I'll try to be. Good night.